Good morning, everyone. It's Chris Lafratta, your favorite Calgary realtor, and I just wanted to start off with some information that I don't see anyone else talking about. So I've collected the Alberta insolvency numbers for the month of May for as far back as the data would go. May is the latest month that we have stats for. So we have from 2011 to 2024 for the month of May. And what we're seeing here is it's the highest rate on record of Albertans becoming insolvent. So not being able to pay their bills, having to do a consumer proposal or bankruptcy. We're over 1,600 in the month of May. Back around 2013, 2014, that number was half that. And it's fluctuated since then. But Albertans are not doing well. A lot of them are in some serious financial trouble. Also, if you're coming to Calgary, make sure you have a job lined up first. Calgary's unemployment rate hit 8.5% as the poverty gap widens. So Calgary's unemployment rate was 8.5% so it was 0.4% percentage points higher than May's. So this is the June data. It's also the highest unemployment rate for any major city in Canada. So a lot of people are coming to Calgary, but it's not because our economy is booming. It's just cheaper to live here. Let's take a look through the July sales statistics for the city of Calgary. All right, supply levels improved, taking some pressure off prices. So sales were actually down 10% from last year. New listings up 11%. Inventory up 18.9% year over year. Months of supply up actually significantly from last year. So it's still a seller's market, but becoming more balanced. The total residential price up 7.7% year over year, detached price up 11.2%, semi-detached up 11.9%, row houses up 14.6%, and the condo apartments up 17%. So the condos have been doing very well. If you have a condo, really good time to sell because they're not good long-term investments. They don't hold their value typically. And let's see which regions are doing best. So staying with the trend we've been seeing for the past while, the East has done the best. So our prices are up 16.7% year over year, and followed closely by the Northeast, prices up 12.7% year over year. And again, this is because it's just so much more affordable there. And you got to keep in mind, people are coming to Calgary because they can afford to buy stuff. People, unless you already bought years ago, you're going to really struggle buying in BC or Ontario. So people are coming here for affordability, not because the economy is booming. So they're going to places that are affordable. So that's the Northeast, the East. City Center is really not doing very well at all. The South and Southeast are doing well, but both very desirable areas, not super affordable generally. All right, let's move on to the areas outside of Calgary now. Looking at the areas outside of Calgary now. Airdrie, our prices up to 8.2% year over year, sales down 4.1% year over year, and inventory is much higher, 44.7% year over year. Months of supply, again, months much higher, so it's a much more balanced market, although still a seller's market. We're at 1.6 months of supply. Cochrane, our price up 9% year over year. Sales are up 15.3% year over year. Inventory is actually slightly down 5.1% year over year. Months of supply also down 17.7% year over year. So it's actually becoming a little bit tighter in Cochrane. Okotoks, prices are up 6.2% year over year. Inventory up 25% year over year. Months of supply also up 25% year over year. So still very tight supply at 1.27 months of supply, but it's trending towards becoming more balanced. And let's see where we've seen the greatest price increases. So actually Strathmore has done very well, 11.6% year over year increases, followed by Canmore. Canmore I don't really touch on, totally different market. Airdrie up 10% year over year. And Cochrane. So Strathmore is really good. It's about a half hour from downtown. Really has a good small town vibe. And you can get quite an affordable home there. Let's see what our interest rates are doing. So we did see the Bank of Canada cut the overnight interest rate for the second time in a row, bringing our rate to 4.5%. That's the Bank of Canada's overnight rate. Now let's see how that translated into the variable mortgage interest rates. Okay, looking at some variable 5-year mortgage interest rates from ratehub.ca, we're in the mid fives. So it still makes sense to get a fixed rate mortgage at this point, but if you think that's going to go down a lot, you can take the gamble, but it's a gamble. Now looking at the 5-year fixed rates from ratehub.ca. Now this is for an insured mortgage. So we're looking in the mid fours. Now let's see what we're looking at if it's not insured. It's a little bit higher. So close to 5%. You're looking around 5% uninsured and 4.5 to 4.8 insured. Just keep in mind, if you get an insured mortgage that's less than 20% down, you do have to pay a mortgage insurance premium, which is pretty expensive. Now looking at the Canada 5-year government bond, we've actually seen it collapse over the past few days. So we're at 2.896. We haven't seen a rate like that since April of last year. So it's been about a year and a quarter since we've seen that. That literally just happened. Let's see. Over the past 5 days. So we were at 3.2 5 days ago, and now we're at 2.9, essentially. If this sticks, this will lead to lower fixed rate mortgages. So it at this point, it kind of still makes sense to, if you're buying in a month, probably you should get a fixed rate. All right, now I just want to focus a little bit on how poor the Canadian economy is doing right now. So this article talks about how the Canadian economy isn't doing as well as it looks. So just to summarize, here it is. So we're not doing very well. The real GDP is increasing, but the real GDP per capita is going down. So on an individual level, each Canadian is getting poorer. But because we're packing in so many people, the gross number is still getting larger. And I don't know what the strategy is there, because we don't have jobs for those people. Jobless summer, why youth unemployment is at a decade high. So youth unemployment jumped to 13.5% in June, a level not seen since September of 2014, excluding the pandemic. So I can tell you exactly why that's happening. A lot of the companies who would be hiring youth are hiring immigrants. That's exactly, we're packing the country full of people. Uh, a lot of the people coming now don't have a ton of skills, or their skills are not transferable. Their qualifications don't transfer. They're not recognized here. So you can have engineers driving Uber, uh, which leads to an issue because the youth, young Canadians, also don't have any qualifications typically, and they need those entry level jobs to get some money and get some work experience. Okay, so I am in Calgary. I am a realtor in Calgary, but I also want to give you an idea of what's going on in the rest of the country, at least briefly. So this is from Rob Marsilio in Toronto. So the Ontario Toronto GTA market is right in the toilet right now. So as I was going through the sales stats in Calgary, I was talking to you about months of inventory, and I was telling you like 1.5, like that's kind of where we are. Very tight market here. In the GTA, Toronto, they're up to 5.22. So this is a severe buyer's market at this point. And the last time the months of inventory in the GTA were this high was February of 2009. So we're basically going through a 2008 like correction in the rest of Canada, at least in the GTA, and probably in BC or parts of BC. I do know some areas in BC that have gone through this and are struggling right now. So it's not all rainbows and unicorns. We're just doing relatively okay in Calgary. Okay, this is another data point that nationally we are going through a very serious housing correction. This is a chart put together by Hanif Bayat, who is very knowledgeable about things. The total approvals for mortgages at Canada's chartered banks, so any bank, not a credit union, not a B lender, but a bank, we're at year 2000 levels. So we're down over here. But the year 2000 was a long time ago, and there are a lot more people in the country now. So we should be, even with a not so good market, we should be above that mark. We're not, because people are struggling in a very serious way. All right, this is from MNP. 2/3 of Canadians desperately need interest rates to go down. So here's a little bit of highlight. The MNP report found 46% of Canadians are $200 or less away from failing to meet all their financial obligations, while 3 in 10 say they already can't cover their bills and debt payments. Not so good. That's definitely not how a thriving economy should look. So this is a video from Global News. It's actually from August of 2023, so last year. And what this lawyer saying is that foreclosures in Calgary are the worst since 2008. And I actually expect that it's gotten worse since then. As we looked at earlier, the insolvency rate has gone higher. Now, one good thing is that the home prices have gone up in Calgary. So typically, these people don't need to go to the court ordered sale process. What typically happens is they stop paying the mortgage. The bank takes them to court and they say, hey, you have to pay up. And they give them a 6-month redemption period. During that 6 months, they typically sell. So we're not seeing a ton of foreclosure listings, but we are seeing people go into that process much more than previously. So the government does not want a housing crash because a lot of Canadians have their wealth in the housing market. So they're pulling out all the stops to prop up the housing market. They just announced that you can get 30-year mortgages again if they are insured mortgages, so less than 20% down. I don't know if that's something you really want. I mean, do you want to be stuck in a mortgage for 30 years? Uh, Sometimes renting is a good option. Just throwing that out there. All right, here is some more news out of Ontario. Ontario housing starts tumble. Developers warn the situation will get worse before it gets better. So it just doesn't make sense to build in Ontario right now. So the number of housing starts the first half of 2024 has lagged behind the previous year, while June saw a 44% drop year on year. So in Ontario, the prices are high and they can't build. That's why people are moving to Alberta. Now let's take a look at housing starts across the country and who's doing well, who's not doing well. Okay, these are some statistics. The information is provided by the government in Alberta, but it comes from all the various provinces. These are housing starts for all the provinces comparing June of 2024 to previous June 2023. And let's see where housing starts are going nationwide. So, first off the bat, Alberta, we're up 60% year over year. That's impressive. And Quebec is up 72% year over year. So, Quebec, they pretty much they always get the better deal of any federal program. So they're taking all these federal programs that are supposed to build homes. They don't really work anywhere except for Quebec. So Quebec is doing well with those programs. Ontario and BC, not so much. BC housing starts are down 37.8% year over year for June. Ontario is down 43.8% year over year for June. And we don't pay attention to the other provinces, they're too small. So BC and Ontario, it's expensive. They can't build there, and it tends to be where most of the immigrants go to initially. That's why people are coming here. Alberta, we have a lot of space. Aside from the Rocky Mountains, it's just flat land, and we can build to our heart's content. BC is hemmed in by the mountains and the ocean. They also have the agricultural land reserve. So any land that really has ever been used as farmland cannot be developed. Ontario has the green belt, which they're sometimes just taking chunks of land out of. They also have the Canadian Shield up north and the Great Lakes. So they are limited also in their space to build out. So it's really just about Alberta right now. Okay, so we had a lot of doom and gloom on this video, so I thought I'd end with a little bit of positive news about Alberta, our economy. So Precision Drilling, big drilling operation here in Alberta, attributes the Canadian rig demand growth to the Trans Mountain Pipeline. So quick crash course on oil and gas. So oil and gas doesn't come from the gas station. It actually comes from the ground. And you have to drill, and that stuff comes out of the ground. And the thing that does the drilling is called a drill rig. Okay? So first step, you drill a hole, stuff comes out. Now we're seeing an increase of that in Alberta because the Trans Mountain Pipeline has been completed. Great. So our economy should do better because of that. We do have a very large oil and gas sector here in Alberta. All right. And this is a report from Deloitte. And what they're saying is the Alberta economy is actually doing rather well. We do have quite a high unemployment rate, but that's just because we're getting a lot of people moving here and not getting jobs immediately. Hopefully, eventually they do. It is taking a long time. Do not move to Calgary unless you have a job or a fair amount of savings. So what we're seeing is that the completion of the Trans Mountain Pipeline, which goes from Edmonton to the coast near Vancouver, exports oil. That is benefiting our economy. Also, the population growth is benefiting our economy. Inflation is a tad bit higher because of that, so that's mostly shelter inflation. And the GDP did surprise upwards because of the Trans Mountain Pipeline expansion. All right, that's all I got for this week. Take care.